Good morning, everyone. Greg Taylor from Solder Brothers Emerging Companies Limited here. We'll just wait just another 1 minute just to let a couple of stragglers into the webinar, then we'll make a start. But appreciate your interest and attendance. Yeah, we'll make a start within the 60 seconds. Thanks again. Okay, look, I think we might make a start and remind everyone that what we do have is a recording of today's session that will be made available to everybody. And also, just again, reminding people that we do have a Q&A function, which you can type into the messages there, which will be moderated and passed through as we go. But Yossi, if we could just put that on mute for now, please. We've got a bit of background noise. Thank you. All right, well, again, hello everyone and Happy New Year. Seems a bit odd to be saying that in mid-February, but this is part of our regular webinar series for SB2 Emerging Companies Limited. And today I'm here to talk to you about basically the 2024 calendar year in review. What drove markets, what drove performance, how our fund performed relative to key indices, and then also, then turn our attention to the outlook for 2025. What we believe will be the key drivers for the year, and how we've positioned the portfolio to take advantage of those, and and potentially a number of catalysts that will hopefully drive portfolio performance further in the year ahead. So thank you again. A couple of late joiners. So just again clarifying, Greg Taylor, portfolio manager of Solder Brothers Emerging Companies Limited, which is SB2, which is an ASX listed investment company, which is dedicated to investing in small cap Australian equities, and we focus on companies with a market capitalisation of under $500 million. And again, just to recap here, Solder Brothers is a global fund manager with over $4 billion of group assets under management, and they're spread across equities, credit, and property. What I'm pleased to continue to report is SB2 as a fund has had a strong year of performance in 2024, and it continues the longer term strong performance since inception. But over a 3-year track record now, and ahead of all key indices and positive performance throughout that period. Though in the 12 months to December 2024, the fund delivered a gain of 27.4%, which that's the underlying performance, which is great. What I'll talk about shortly is the actual SB2 share price delivered a 50% share price performance over the same period. And the difference between those two figures was the closing of the discount. And we've talked about that previously, but ultimately what will continue to drive returns is the underlying portfolio performance. So we'll speak a lot about that today, and why we're really confident that we've got the portfolio position to deliver some strong returns again. And what I'll touch on today also is, we've spoke about the last 12 months or so that we had a positive outlook over the next, so we said over a 2-year period for Australian small cap equities, and that started to play out in 2024, but we retain that conviction and believe that we're going to see quite strong performance in 2025, and I'll talk about what's behind that belief as we head into the new year. So just turning over the page, bit of a snapshot here. It's a little bit busy, I apologize, but it's again that 12-month period of 2024, just all the major indices and how they performed. What we've got in the dark bold line, which is titled NTA, is the underlying net tangible asset performance of the SB2 portfolio. What you'll see there is it delivered 29% over that period. What it actually did, it outperformed all major indices globally. And these, firstly, we're not really a benchmark aware manager. We focus on quality companies with good growth and reasonable valuations, and that's what drives the construction of our portfolio. But we're often benchmarked to a number of the broader market, and what we use is the Emerging Companies Index, the XEC, which is a small cap dedicated ASX listed benchmark, and it only delivered 7% over the period. So the portfolio, significantly outperformed the small cap market in Australia. And then if you look globally, also, significantly outperformed the global small cap index, and then some of the more well-known indices such as the S&P 500 and the ASX 200. But again, I'll just bring your attention to the SB2 share price, which is the vehicle in which you invest. If you invest into that on the 1st of January of 2024, you would have achieved a 50% return over that 12 months period, which is pretty extraordinary. And I genuinely believe the fundamentals and foundations are in place for the ability for that to be replicated in the year going forward. And I'll talk a little bit about that. But if we jump over to the next slide, what we see here is just a little bit about the underlying SB2 portfolio. I've spent a lot of the time over the last 6 months in these webinars talking about our key holdings and what's been driving performance. So this is a bit of a snapshot of exactly that. So over the period, and what is really pleasing is our top 2 positions were the best performing stocks in our portfolio. So we weight the size of our positions based on conviction, and the conviction we have in the risk versus return profile of those underlying companies. And now I've spoke at length about AI Media and our Fabs as our 2 largest holdings, and really pleased to report that they had a good year, and they continue to be our top 2 holdings, and we believe that the next 12 months still has significant opportunity for both of those companies. The one that came in third was actually one that we no longer hold, a company called Smart Parking. We went close to pretty much doubling our money in that investment over the 2024 year. But again, we do have very disciplined valuation work that we apply to our holdings. And in the instance of Smart Parking, that passed through our valuation, and the risk versus reward just didn't stack up. So you'll see that falls into that category on the right, key positions exited. And I'll talk a little bit about those shortly. On the other end of the spectrum, where the top or the bottom 3 contributors, or the ones that detracted most from performance, was Top Shelf Holdings. That's currently suspended from the ASX. It's not currently trading, but it's recently put out a quarterly update and a notification around a recent asset sale and going through a recapitalisation process. So we took a lot of pain in that in 2024. I don't think there's a lot of downside from here. We continue to hold that, and it'll be an interesting next 6 months to see if we can get some improved performance out of that holding. The next one is one I've spoken about at length previously. Also closed the loop, had a series of downgrades, and had a takeover offer which fell through. So it's sort of had everything going against it. I've actually got an upcoming trip where I'm heading over. The major driver of that business, Close the Loop. So it's a circular economy. It recycles and repurposes products and packaging. A big part of their business and a big driver of the earnings volatility has been their US business. I'm actually shortly heading over to the US to spend a day with the US management and go through a site tour and meet a few competitors over there to really get our head around what's going on. And that's how we look to get additional insight and a competitive advantage in the names in which we invest. It's easy to read the headlines from the company, but putting on the wearing out a bit of shoe leather and going and meeting these people in person on site is the best way to get to the bottom of what's really going on. We do that with a lot of our companies, and that same trip, I'm also spending some time with the AI media business and their senior executives and customers in the North American market. So that will add a lot of insight, and I'll report back on that in the next webinar. The third one, there's 5GG or Pentanet. Interestingly, it was a detractor in 2024. In the 5 or 6 weeks we've had this calendar year, it's probably doubled in share price. So we've probably got that performance back, but it did hurt us in the year prior. Again, the other point, I won't go through every one of these holdings on the right, which are the key positions exited and the new positions. But what I'm highlighting here is that that those 5 we exited were top 5 holdings in the fund at a point in time. They reached their valuation. We'd got great performance out of them, and we decided to exit them out of the portfolio and replace those with new holdings. Over the page shortly, I'll talk about a few of these new holdings. But what we're saying here is that we do turn over about a third of the portfolio every year with new ideas, and as things reach their valuation or the underlying fundamentals change. So very much an actively managed portfolio, but with a 2 to 3 year view. So then jumping onto the next slide, I just thought I'd talk a little bit about going forward. I don't think we'll get too much value in me talking about what happened last year and what drove performance. I thought that I'd focus on what I believe will be the key drivers for the next 12 months. And I've broken that out of the domestic and global markets, and obviously the global has significant influence on our domestic market as well. But just looking at some sort of macroeconomic and geopolitical, I guess, factors that we will be paying our attention to in addition to the underlying companies is firstly, we're all aware we're about to move into an election period in Australia that will have bearing on various industries and sentiment. And there'll be some industries and companies will be winners and some that'll be losers, and just the broader sentiment of businesses and consumers will be at the whim of what goes on there. So we'll be following that closely and seeing how that might play out in presenting challenges or opportunities for companies in our investable universe or within our portfolio. The other one, which is critical to small cap performance, and again I've spoken about it at length, is in the past is around interest rates. RBA meeting today. Let's see if they start the rate cutting cycle today. It's widely reported they may, but they may not. But I think as we look over the course of the next 9 to 12 months, we expect that interest rates will start to come down, and that typically has a positive influence on sentiment and a number of specific companies. The thing that it's kind of intertwined to those 2 points, but it does drive the Australian market so heavily, is just consumer sentiment. And there's a lot of things that feed into that. Housing, spoke about election, interest rates, and a lot of other things. I'm still not a big believer or big bull on the consumer in the Australian market at the moment. I still think they're challenged and stretched. You'll see we've got very little consumer discretionary exposure in the portfolio. There will be a time that I think with a bit of certainty around the election and interest rates and a few of these global issues I'll talk about shortly, that I feel the consumer might be in for a better period. I don't think that's yet, but I think it's coming, and we're watching that closely and how we position the portfolio accordingly. But as it stands at the moment, still quite bearish on the Australian consumer, and that's reflected in our portfolio construction. And the final point there, and again, it's a global issue, but very much focusing on the Australian market, is the exchange rate. And a key driver is the Australian versus the US dollar. You've seen that be pretty volatile over the recent period, sort of got up to the 66, 67, then back down to 60 cents. That's a 10% swing, and that can have a pretty dramatic impact on a myriad of businesses. And so I think everyone's watching quite closely what's happening there. And again, that it's funny. A strong US dollar and a weak Aussie dollar actually can be a positive for many companies, and obviously the reverse for others. So it's just really understanding those sensitivities for our businesses in which we invest. Moving to the global, again, it's not for me to start giving global sort of macro views, but what we're all aware of is a lot going on in the geopolitical environment at the moment, and that will continue to drive global sentiment, global investment, and global capital market activity. We've obviously had the recent US election and some interesting policies and movements coming out of that part of the market, but there's obviously a few other things going on around the world which is still yet to settle. So that will be at the forefront continually. And there's an extension of that, the trade wars, which is becoming increasingly topical. We've seen some pretty dramatic moves out of the US at the moment. Most recently, Australia's been caught up with that around our steel industry, and I think there's going to be some retaliation from various markets, countries, and markets. So watching that closely, and Australia plays a key role in both exports and imports. So again, how that plays down to the small cap universe will be critical. Interest rates globally, I think enough's been said about that. And I'll just put this black swan event in because ultimately we can focus on all these things that are in front of us now, or we can see on the horizon, but more often than not, it's the things you don't anticipate or see. And fingers crossed we don't see anything like that. But history tells us that you've got to have some diversification and conservatism in your portfolio to be protected for such a scenario. Moving on to the next slide. What I'm just pointing out here, and it sort of transitioning to why such a positive outlook for the small cap market. And I've spoken at length about the valuation differential again over the last 6 or 12 months between Australian small caps versus global small caps, but also versus Australian large caps. And we remember that earlier slide where we had the performance. Actually, the small cap market still underperformed. The Australian small cap market as a whole underperformed the global small cap market in 24 and underperformed the large cap market. So that valuation differential is still absolutely there and really yet to close. And I think that will continue to. But another driver of the performance isn't just valuation, it's also the earnings outlook. And what you've got here is this is in an Australian context. The next couple of years, this is not our earnings, this is consensus across all companies in the market, in the Australian market, listed companies, obviously. We've come from a period where the earnings growth of small caps has been inferior or less than that of its larger cap peers. We're now moving into a period where the earnings growth of the underlying Australian small cap companies are forecast to be significantly superior to that of the large cap. So overlay the strong earnings growth and superior earnings growth of small caps, the ongoing significant valuation differential in small caps trading at a significant discount to their large cap and global peers. Then a few of these macro catalysts around interest rates and a few other things, I really continue to believe in that optimistic view for Aussie small caps over the next 12, 18 months. And clearly the SB2 portfolios, that's a tailwind, and we're well positioned to take advantage of that. So jumping on to the next slide. Just talk a little bit about how we've positioned the portfolio. And again, so we've spoken about the sort of the macro and what's driving all that. But what I want to talk about is how we've positioned the portfolio and why we're upbeat about taking advantage of these positive opportunities in the market. And so normally I talk about the top 5 holdings. What I've done today is just put the key holdings there. I thought I'd talk about a few of the new positions or ones that mightn't necessarily be in the top 5 at the moment, but they might you might see them come into the top five. I remember we hold about 20 to 25 holdings. So, and typically how we build the portfolio and our positions are, we'll start with a 2 to 3% holding, continue to cross-check and challenge our thesis. Once we get comfortable and greater conviction in that investment, we tend to build our way into a larger position, and that's what you're seeing with a number of these names here. And one which is interesting, which the first one in the list there is a biotech company called Botanics, and what you'll see there is it has a market cap of 840 million, and we say we only invest in companies. We start an investment in a company less than 500. So since we've invested, it's actually doubled. We haven't sold a single share, but it's sort of increased its portfolio position through share price performance. And we continue to have a very optimistic view about the outlook for Botanics. So Botanics, it's got a really amazing credentialed management team. It's got a track record of growing businesses from sub 500 to multi-billion-dollar businesses. And what this one does, it's a dermatology product, which is, deals with people with excess sweating problems. So again, it sounds a little bit, unique, but it's a big market. These guys have got some proprietary IP, which they're now in the midst of commercializing. They're in market. They're getting some really encouraging early signs. And this has the potential to be a multi-billion-dollar company. And so that's one that's done well for us already, but I think it's got a bright future. Another one which we continue to build our position and recently participated in a placement via a capital raising this month, actually, is a business called Bluebet Holdings. So this is a sports wagering company, and it's going through some inorganic consolidation. So it's been making some acquisitions, but it has an amazing management team and technology platform in which it enables them to make these strategic acquisitions and extract significant synergies out of those. And again, I would hazard to guess we're close to up 100% on that holding already. But off the back of these recent transactions and momentum in the business, we think it's got a long way to go. So Bluebet's the other one. Acro is one you've heard me talk about before. It's been a top 5 holding previously. We invested in this company at 50 cents, went up to $1, and we took some money off the table, and it sort of went up. We took money off the table close to $1.20 actually. And then it consolidated and fell back under $1, and at the same time had some really positive performance in the underlying business. So we've built back into that position. It's in a strong dividend paying business. We think it's got a really favourable outlook, and I think there's some short-term catalysts coming for that business around significant contract wins and potentially some M&A activity. Another one which a little bit opportunistic, but it's one I've followed for 5 years and never held, and it finally got my attention late last year, called Camplify. It's a booking platform for camper vans, both in Australia and globally, and big presence in the US. In Northern Hemisphere, in Europe as well, is where its major international presence is. We watch this business. It's a business that traded a share price at $3 and $4, and I could never work out why that was so expensive. And so we never quite got there. We liked the business, but it just wasn't valued appropriately. Unfortunately for these guys, they went through some challenges. They made a big German acquisition and they had some integration issues. And then as a result of that, they also had quite a lot of volatility in their shareholder register. Like, everyone ran for the door at the same time. And what we saw there was a share price fall from north of $4 down to below $1. And we built a position at 80 cents. And we did a lot of work on this, and it probably took us 6 months while that share price was falling to do the work and get the level of comfort. But we really do believe that they've solved those integration issues with that acquisition, and they're starting to get some really positive traction at a time when it's at its lowest valuation. So that's one which we're excited about. And just finally, on Alcidion, I've spoke about it before. It's done really well in the last couple of months, actually. It came out with another contract win this morning. And I think you'll hear a lot more about that company in the year ahead. So that's how we position the portfolio. I always talk about the portfolio metrics because that's what you're getting when you invest in SB2. You're getting a diversified portfolio of approximately 25 holdings. And again, we do a lot of valuation and fundamental work, and we still have the weighted average upside of valuation north of 70% in the portfolio, which is really encouraging. It doesn't happen often. It's been there for the last 12 months, but it's really starting to unlock. And then I'll just talk about some of these key metrics. And if I could find a single company that's growing at close to 20%, it's got good profit margins and on a PE multiple of 10 times, I'd get really excited. I've got a portfolio which the weighted average metrics reflect that. So you've got 25 companies where if you mix all their metrics together, that's what you get. But you get the added benefit of the diversification factor of that. So that's what we're, the real difference here. And what hopefully I've shared with you is the level of active management that we do around these positions. It's just really hard to replicate that yourselves. And so that's sort of how the portfolio is positioned. Still, the underlying fundamentals are very encouraging. Spoken about the top-down macro is good. We've got a good, stable team. And the other couple of catalysts that will continue to drive the portfolio is I've spoken previously and in the recent webinar about our unlisted holdings. I've spoken about a number of those are likely to have catalysts in the 2025 year. What that means is probably likely we will exit them via a trade sale. And two of those key holdings are in a process at the moment. A transaction may not occur. What I can tell you is it's not going to happen in the next couple of weeks, but over the course of 2025, I would be surprised if we don't get a positive outcome on at least one, if not multiple, of those unlisted holdings. Then the other thing to keep in mind is, very imminent. We've got at the release of our half-year results where we committed to the market that we'll be announcing our dividend policy. So keep an ear out for that in the coming weeks. Again, to date, we haven't paid a dividend. We're likely to move into a dividend-paying vehicle, which is an exciting milestone for all involved. And we continue with a share buyback. Again, we touched on that we're still trading at a 30% discount to underlying asset value. We've got an active buyback. So what that is saying is, we're backing everything I've just said with our own money by buying the shares ourselves in market. That's on hold until we release the half-year audited accounts and make the dividend announcement in the next couple of weeks. But we will continue with that buyback as soon as the blackout period ends, which will be the end of the month. So that is all I intend on covering today. I've seen a couple of questions filter in throughout, so I'll hand over to Megan and just remind if you had any questions, please put them in the messaging function, or alternatively, you could reach out to myself or Yossi or a representative from the Solder Brothers team and be happy to provide any more information on a particular point. But Megan, if you could, please just share any questions that might have come through.
Yes. So a question around current cash levels. What are we at currently or fully invested? I think we've spoken about this previously, but just an update would be great. Thank you.
Yeah, absolutely. The answer is we're probably at about 5% cash at the moment. So it's a little bit higher than we have been. That's just been because we've exited a couple of positions and waited on the half-year results to potentially move into some new positions. But just to reiterate, our philosophy around cash is that, especially with this view about the market and the underlying confidence in the portfolio, but this is a vehicle that gives you a diversified exposure to small caps. We believe it's up to the underlying investor to make the tactical decision on what percentage of their portfolio they want to have in cash or in small cap equities or other asset classes. So we will typically be close to fully invested, and that's anywhere between 2 to 10% cash. At the moment, we're at about 5, but I'm sort of likely to deploy a little bit of that if off the back of some company meetings in the coming weeks. So I don't expect it to go much higher over the near term.
Great, thank you. No other questions right now. Yossi, have you got anything your side? Oh, you just need to unmute.
Yeah, just congratulations to Greg on a stellar performance for the past 24 months. Obviously, I see a lot of familiar names who have joined this month's webinar, and we're going to be continuing these on a monthly basis, so we can expand, the information that we present to yourselves. But the past 12 months outperforming every one of the indexes just shows, now that Greg's been with us for over 2 years, has really got his feet under the table, and how this portfolio is now outperforming the rest of the market.
Thank you, Yossi. Yeah, just hit my 3-year anniversary with Solder Brothers. So, but you're right, it took a good 6 months to transition the portfolio, and it's encouraging that we're starting to see the benefits of the hard work. Not only from myself, I've got a great team, and I didn't talk about them too much today, but in previous slides we share that team, and I've got one of the best teams in the country focusing on this sector, and which makes things a lot easier. All right.
Well, thank you everybody for attending. Appreciate your time, and again, feel free to reach out to Greg or myself directly if you've got any questions, and we're always happy to come to your offices or meet up for coffee to talk about what our activities are in more detail.
Thanks, everyone.
Thank you.